Today, with unfortunately one of the panelists and make it, we will keep this more as a simple and a straightforward freewheeling session between two of the players who find a lot of risk in this industry. So, while initially the program was, the concept was about the risk for the from a pure financing perspective and other aspects, we thought now we'll convert this more into what are the risks we see both as the two main pillars in this field, which is insurance and financing side. Whereas I hope there'll be a lot of question on insurance side, as I see that when I meet people. So a small introduction. Myself, Bhojrajan. I had an insurance broking outfit. I've been in the insurance industry for 36 plus years. We specialize more on renewable energy and e-mobility. That is our space. That's one of the reasons I'm here. And with me is Aditya. Just few words.
Hello. Yeah. So my name is Aditya, co-founder and CEO of TapFin. It sometimes gets a little difficult to identify what TapFin does because we sit across multiple parts of the e-mobility ecosystem. We have a intelligence platform where we use telemetry and financial data to contextualize it for lenders. We also have our own NBFC where we take balance sheet exposure, and then we also work with a lot of large NBFCs, small NBFCs, and banks to facilitate financing in this ecosystem. Essentially, where we come from, because of our the co-founder backgrounds, is how do we ensure that more capital is allocated to this ecosystem, right? And everything that we do is very focused from that perspective.
Good. So, Aditya, I will start with a standard question, which most in the industry talk is, the conventional players in financing side are still not taking this industry seriously. If you talk to them, their answer is there is a lot of unpredictability with this field. It needs to mature. One is the battery related issue. Then second is the resale value. And third, of course, on the credit profile of the people. So how is the new age companies or platform like yours addressing these challenges and making it easy for people to come on?
Sure. And been going to panels and for the last 1.5 to 2 years in this industry, and strangely the same sort of questions is being asked. From a lender's perspective, it's quite simple, right? Lenders try to put their money and they have a fiduciary responsibility, right? Because they're actually regulated entities. Similarly, just like insurance companies, right? What do they look? They chase after businesses that have a proven business model, right? They look at businesses with predictable cash flows, right? With proved and mature technology, right? With players that have a long history of performance, right? Now, if you look at all of these factors in this ecosystem, almost none of these exist, right? The good thing is the last 2 years, we've seen a lot of this ecosystem start to mature, and we see players, evolving or emerging, who then, a lender can look at as reference points and start to allocate some capital. How we're trying to solve this, as I said, is here's a simple thing, right? You're looking to migrate to, a technology from ICE to EV in the space of 15, 20, 25 years, where the earlier industry has taken maybe a century to mature, right? You also have you asking people to migrate to an ecosystem which has more friction than the existing ecosystem, right? Think about it, right? Which OEM should I buy, right? Dealer financing, ICE industry and the world knows that financing for vehicles is going to happen at the dealer location, right? You have some missing, that piece is missing, right? The secondary market, evaluation of vehicles, right? None of these exist, and therefore it's very difficult to see how the progression is going to happen to a more friction-led industry than a frictionless industry, right? How we try to solve that is essentially by looking at this data and contextualizing it, right? And I think the previous panel has actually answered a lot of these questions, because they talked about data, they talked of some of these things. Essentially, if you look at what you have to convince the lenders is that you're not underwriting the borrower like you do in the ICE industry. You're actually underwriting the borrower and the asset, right? Now, how can you take underwriting decisions when one part of this entire two-leg underwriting process is something that you're completely unaware of? where we said, let's start with this. Let's start with the data that already exists in this ecosystem. Let's try to make sense of that for the lenders. Contextualize it, right? It's the same information that's sitting, if you talk about telemetry, battery, etc., right? It's the same data. You have to contextualize it for the lender and help them understand how it makes sense for their underwriting models, right? Or for the risk that they have inbuilt in their ecosystem. Each lender has, has their own models, has, differing, risk aversion, if you will. And then therefore, how does that data make sense for each individual case? It'll be very difficult for you to create one underwriting model that sits across all the lenders in this country, right? It's almost a bespoke implementation for each lender. And that's where I think the data is. So one is, of course, old data, which unfortunately not everyone has. We've had cases where, a lender started to use our platform. The expectation was that there's IoTs in those devices and there were none, right? Which is something that even the lender wasn't aware of. So I think that's a first exercise where you have to get lenders to a point where they start to look at this information, start to contextualize it for them, and then work with players. And that's where I think a lot of collaboration needs to happen in this ecosystem, right? Everyone has to come together. If there's any lender that says, I'm not going to share any data, right? If there's any battery OEM that says, I'm very unwilling to share any information, right? If there's a lender who says, I'm not going to look at this data at all and I'm going to continue to underwrite how I've done traditionally, right? Insurance companies have to come in similarly. So a lot of that collaboration has to happen for the ecosystem to come together. All of it, I believe, sits on a layer of data that different people in this ecosystem own, right? Financial understanding is with the lender, battery and vehicle understanding is with the manufacturers. How a vehicle is run and used is with the fleet operator. So that's what TapFin is doing, building a platform which sort of builds all of this together, contextualize it, and help each of them make the right decision.
So one problem we face, the data is still seen as proprietary. When we try to, from an insurance perspective, try to have access with the data from the OEM point, I've not come across people being that much forthcoming. From a financial perspective, are you able to address that challenge?
So it's a little easier for financiers to ask for their data, right? They do have a lever of, they can restrict your access to even running those vehicles because you desperately need them, right? So we've seen that when we go as a pure tech company to any of these operators or OEMs, there's far more reluctance than when their financing company asks for more information, right? There's also varying levels of data that you require, right? If you're very stuck on your internal models of looking at the data and making sense of it, means that all 150, 180 parameters have to be given, only then can your model take a decision, then you'll find it difficult, right? You just have to find ways of whatever data you get. Can you create cohorts out of it? Can you anonymize it? Can you aggregate at different levels? Can you look at, as you said, figure out if, I'll give you a small example, right? Where someone said, we will not give you charging data or where charging is happening, right? It's easy to look at GPS data and then, figure out what really is going on the charging side of things, right? So while there is reluctance, you have to figure out how to work. The one thing is, and this is a sort of a dichotomy, which I don't understand. OEMs have certain expectations from, and I say OEMs also mean fleet operators and anyone in this ecosystem, have this expectation from lenders and insurance companies to actually take more risk in the e-mobility ecosystem, but there's reluctance to share information, and therefore for them it's the lender who's not really coming to the party, right? The lender sitting on the other side and saying, guys, can you take a little bit more risk than just your capex, right? And help us underwrite this better by sharing some of this information that rightfully we should be able to, right? And therefore, for them, sometimes the OEMs or the fleet operators unwilling to share data become villains, right? I think both sides have to come to the party and sort of sit across the table and say, no, it's any sharing of data has to be, is beneficial to both. In terms of proprietary data, and especially now with DPDP also coming in, these are not simple questions to answer, right? So therefore, the platform which facilitates this handshake, which looks at this data, which works on this data, which possibly sometimes can even become a data fiduciary, not just a processor. I think that consent layer, DPDP, is something that, that seriously needs to be managed. And there's massive implications on the commercial and reputational side, especially for larger lenders, OEMs, operators, etc. Right? So while yes, it's beneficial to both, I think the mechanism of data sharing and protection is also extremely critical.
Like in, say, a renewable space, we used to say the project should be bankable. So there's one area where insurance can play a role in making it more supportive from insurance financing perspective. Is we have seen the challenges why the conventional players don't come into this. There are ways insurance can play a role. Like for example, extended warranty programs from insurance player. What is the challenge the industry is talking about? We talk about degradation of batteries. We talk about resale price not being there. Overall, there is a lot of negativity being talked about. So, to bring more financial into the system, the data points, if shared properly by the OEMs, will help the insurance industry to design a robust, say, warranty programs. Today, what is happening with warranties is the OEM is giving warranty, the component OEM. But will he exist after 1 year? This is the problem we faced in solar industry 20 years back. Hundreds of players were there in China. All of them were giving warranties, 15 years, 20 years. The next year, the manufacturer himself was missing. So what was the meaning of the corporate warranty he gave? So the industry demanded from solar player manufacturers, give me an insurance warranty which will be valid whether you are there or not. I think that is something we need now in India. So if suppose a component, I meet a lot of players. I've been in this space at least from 2018. I've been talking to quite a lot of people telling that we need to come together. If the industry has to benefit, the ecosystem should work towards making these assets bankable and insurable. So if to make it more insurable, there is enough number of products. You don't need to reinvent anything. Thankfully, the products that we can give to ICE vehicles have to be extended here. There are challenges in certain components, but the warranty program is, in my opinion, at a vehicle level, not at the component level, going to help this whole industry take things seriously from a financial perspective. So if that is available, for that, one of the missing link now is the data being shared. I see a lot of OEMs who are reluctant to share data. So how do we design a warranty program if we don't get the past experience of it? Now, warranty for components vehicle. So the warranty for the components for vehicles has been existing in India for last 35 years. When I was in United in 1990, my client was TapFin. We used to do warranties for extended warranty for tractors then. But why are we not able to get the warranty programs for EVs in India? The reason I personally say is that there is a lot of, people not forthcoming in sharing data point, which would help them to design the insurance programs much better. And also one of the area I was just discussing on the sidelines was when we talk of the word risk, is there a real understanding of the risk of this industry? A very simple example which I keep telling everyone, just to tell them or awaken them from the fact that I know this insurance is, in an electric vehicle, if your battery is stolen, which costs almost 50% of the battery cost, you will not get the claim unless the vehicle is also stolen. Now imagine a fleet operator. I have an examples of quite a few, where batteries of 20-25 vehicles were stolen on a single day. And unfortunately, they could not get the claim. Why? Because this is considered as a component. Component is stolen. So, what is the difference it makes? If you have understood this risk, understood the policy, then you will question what is the solution for it. The solution is already there. It's called as battery pack cover. It covers theft, it covers water ingression, short circuit, it covers thermal run. How much does it cost? 20% more on the premium that you are paying. So, when it comes to risk and understanding, I think the understanding of the policies in India, whether they can be easily applied and making it a bit comprehensive so that the bankers find it easy and bankable for these assets. This is the space which people need to focus on. I think a bit of a drive should also come from the finance side.
I completely agree. I think these are two industries, and because they're both regulated and they underwrite risk, both of them. So therefore, it's important that they sort of play off each other's confidence in this ecosystem and the ability to actually co-create some products, which helps both underwrite risk better. Just one interesting point around that is when if you're unwilling to pay a little bit more for this insurance cover, right? Then really it's a question of your business models and your margins also, right? If that 1% or 0.5%, 0.8% cost of additional insurance to cover your battery risk, if that really moves the needle too much on the unit economics, then the expectation to move that risk to the underwriters on the lending or the insurance side is not palatable, right? No lender will underwrite that risk if 0.8% really moves you from a margins perspective. But here's an interesting question, which I've always wondered, right? Because this is a nascent industry. You have new players coming in on operating side, on OEM side, warranty, etc. How do you see the progression happening? For example, if at the end of it is just the legacy OEMs left who've done this for 100 years, then do you think lenders or insurance companies will say it's okay, we don't need all of this? I mean, the large guys are not going anywhere. And therefore, your question of the OEM has to survive. The large legacy guys with proper distribution in place. Other than product innovation, where I think is product innovation and servicing, I think are two places where challenger OEMs can really win. But yeah, what's your view on large guys?
Thankfully, the insurance industry is now agnostic. They are still not making any difference between the ICE and the EV. At least when it comes to giving the basic covers, which in India we call it as a third-party insurance and a comprehensive insurance. So those covers are available. But the insurance industry is very choosy when it comes to giving value-added products like the warranty program I talked about, and also a nil depth cover for a battery. So you get a nil depth cover for the vehicle easily. But when it comes to the battery, there are insurers who are not clear or conveying clearly what is their approach towards the claim, whether it will be a depth, because the degradation there is much high compared to the 10% reduction in the vehicle price. So coming to the question, with so many players coming in from the OEM side, today you could see it's not just the established players. Many of the established players I see is more on the B2C segment. When it comes to B2B, we have niche players coming in. The insurance industry is very open. Only on specialization they're trying to have a challenge.